Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to a brand new episode of Markets Tomorrow, where we look at what happened in the markets during the day and how we can plan for a better trade tomorrow. If you're not subscribed, please subscribe and share it to your friends and colleagues so that we all benefit. So what happened in the market today? It was a bounce back, another bounce back, right? So in effect, the market is not giving any clues as to where is it directionally going, and remember that's just before an RBI policy event that's happening tomorrow. So let's see what happened. So pre-market analysis would be for December 8th, Wednesday 2021. We will look at all of these parameters that you see on the left side on the charts, right? And we will also have additional data analysis on all of these parameters that you see on the right side. Also we will wrap up with some actions. So let's get into the action. Begin with the price action. What kind of candle we had today? It was a bounce, but it ended up as an inside bar because the close happened within the big bearish candle of the previous day. That's on the Nifty on the left side. Right side on the Bank Nifty, you can see that it was super bullish, right? It had closed much above the previous 2 days of close, right? That's kind of move that the Bank Nifty made today. So in effect, you can see the 265 points is 1% of 1.56% of move happened, but closing inside the previous candle. Bank Nifty, it's 882 points, that's 2.47%, and closed above the previous two candles. We have seen that, right? So what happened in Friday? This is what happened. It was a gap up on Nifty, gap up on Bank Nifty, huge gap up, and then it was trending upside till it made a resistance at here at the 17,250 kind of range, and then here at 36,750 kind of levels on the Bank Nifty. Till the last 1 hour, it was trending up and then gave up some percentage of that. That's what happened in the price action in Friday. So already expansion has happened. If you see the Bollinger Bands, you can see that the expansion has happened. This does not indicate any consolidation neither on the Nifty nor on the Bank Nifty. That's the worrisome part. But market is giving V-shaped moves. Look at this. This is one V and then an inverted V. This is one V and an inverted V. So inverted V and V's are fine as long as the Bollinger Band shows that it is a consolidation. But this bang, look at this. It is volatility expansion on the bearish side, so it is definitely not a consolidation as we may get trapped. Look at the support resistances that it gives for the next day. You can see that it has taken a support at 17,000 and 1750 from where it had bounced today. So that will be the first support on the downside, and if that breaches then 16,800 where it took support previous day, that will be the next support, which is also a Fibonacci retracement level. And below that you have the major support of 16,700 or 16,750, which is a gap support. And if that breaks, it will go back to the 16,550, 450 kind of levels. On the upside, if you see the first resistance would be 17,200 to 17,300. That is taken, then you have 17,350 to 17,400. And above that you have the Fibonacci confluence of upside and downside retracement as well as the projection. So that level is very important, that is 17,500. So it means that any close above 17,500 only would mean that there is some end of the correction that has happened. Similarly, if you look at the Bank Nifty, you can see that it has taken a support at 35,600 and 900 kind of levels. That be the first support. If the current support of 36,300, which is Fibonacci retracement 50. If that is the first support that is gone, then it goes back to 35,600 and 35,900. That's all. And if that breaks, it goes back to 35,000 level. So on the upside, if you see, the resistance can be seen at 36,900 and 37,000, that's on. And then if that is taken out, we have the resistance upside at 37,400 range, and then above that you have 37,800 800 level and then 38,000. These are distances on the upside and supports we have already seen, and this is for the bank nifty what you see on the right side. So make a note of these support and resistance levels so that you can decide on what to do with your positions, long or short, whatever it is, right? So these levels, whenever it is breached, you have to get out or get in or take the appropriate action as per your trade plan. Bollinger Bands, we have already seen that. Now here is the interesting thing. So momentum, what is that? Today it is once again climbed back to the sideways zone from the bearish zones of Nifty and the Bank Nifty both, right? It is back to the sideways. But what is interesting to note, this is a daily candle. What is interesting to note is that there is yesterday we had seen that there is a bullish divergence and it has worked, but it has not met the targets. The target would mean 17,500, 17,400. That is the target that you can see here. So it is work in progress. The momentum, bullish divergence on the Nifty. But on the right side, in Bank Nifty, you can see that there is the more number of bars are there, so it may be diluted, but there is an unconfirmed bearish reverse divergence which can take the market, take the Bank Nifty index further down in the sense back to where it has taken the support previously. It could happen, but it is unconfirmed. It will be confirmed only if tomorrow you see a move below today's close, right? So that is the two divergences, opposite contradicting divergences in the momentum that you can see on the Nifty and the Bank Nifty. Trend indicators, now in the short term it indicates its DMI negative is dominating in both Nifty and left side and Bank Nifty. Now we can see that the trend bearishness is reducing since the green line, which is the ADX trend strength indicator, which is showing that the bearishness is reducing. Both Nifty and it has taken a bend and it is moving down. So that shows that the trend may not be rising. No, it is reducing. But still in the weekly as well as the short-term daily, you can see that the bearish trend is dominating, right? So until a crossover happens on the short term and the medium term, we cannot say that it's trending, right? Coming to the volatility, you can see that it's later had shot up 8% today, given up 8% and back to square one. So yeah, so we discussed that there is a chance that it is forming another range between 18 or 19, that level to the 21, 22 kind of levels probably, because that's it had hit the 21 and then fallen down to 18, then again fallen, mean reverted up and then again mean reverted back. So probably there is kind of another range formation that may be happening, which is at a high, but much higher volatility range. Not sure whether it will work, or probably it may be just a unusual spike that happened in the weeks for a couple of days and then it gets back to this range. So if it gets back into this range between 15 and 20, then we are safe. The jobbiness may be reduced and it's okay to do the trading properly. But if anything beyond the 20, you have to be careful is what indicates. So IVP, the IV implied volatility is 17, right? And IV set the India VIX volatility index for the Nifty is 18.46. IV percentile is saying 50%. So IV percentile has to keep, may keep moving up as the volatility increases. So that's about the volatility, and open interest analysis is the next one. So what you see here, there is a lot of support writing that has happened, the change in open interest, a lot of put writing has happened here, Nifty and the Bank Nifty. A lot of unwinding of the calls also has happened ahead of the expiry day after tomorrow and the RBI event tomorrow. So the action may be tomorrow also, we never know. Which side also it's not clear. So as of now it shows there is bearishness overall. Put call ratio is not indicating bearishness as such, right? Bank Nifty showing bullish and Nifty almost near to that, 0.77. Put call ratio is not bullish, not bearish I mean. But the open interest graph for the December 9th expiry is showing that there is more dominating call rating that is there overall. But today's you can see that a lot of unwinding of the call rating and the put writing has happened today. So the first supports, the highest put rating is 16,000 and then 16,500. So that is very interesting. And then on the upside you have 18,000 and 17,500. We just got the maximum resistance that is same. So this is kind of giving an so that is something that I would like to relook that once again, if I had made a mistake in taking the screenshot or not. So if you go back and see, you can see that the highest put rating is at 17,000. This is a mistake. This is a mistake here. Make a note. That's what I had a doubt. And the other one is correct. It's 18,000. So highest put rating is at 17,000, and after that you have seeing 16,500, right? So please make a note of that correction. I'm sorry about that, right? So it is 17,000 and 17,500. It's a mistake. And 16,500. This is 17. It's only a mistake. So 18,000 upside and 7,500 is the resistances that you can see there. This is the put support and 0.77, and long build up on the futures open interest. Bank Nifty showing that 36,000 and 35,000 is where the put trading is, and 37 and 38 remains to be the maximum call rating. We'll recheck that also once just to be sure. So Bank Nifty, if you see the highest resistance 37 and 38, and then highest support is 36 and 35, which is correct, right? Right. So make a note of this correction that this is 70. So 17,000 seems to be a very good support for the next expiry day after tomorrow, and it may be between 17,000 and 17,500 that the action may be happening. Similarly, 36,000, right, and 37,000 may be the actual place where the price action may be happening on the Nifty. Yeah, it's a green screen that you see here. All the major international lands, GFC, ICC Bank, TCS, ICC, and Kodak, and SBI. So all the private banks and the SBI have made big moves. The bank has made big moves today. Steel has done well, and yeah, all the steel stocks, and auto, Mali has done well. So overall is a green screen. Sectoral performance, if you see IT, 1% down, 1% up, gaining, right? And it formed a hammer. So, but the momentum is sideways. Metal 3% up, momentum is sideways. Wait for the long positions because it has to catch up momentum. Auto 1.6% up, momentum has to catch up. Pharma is indecisive, right? And bearish zones is where the momentum is. So you just gotta wait. FMCG is for 1% up, but it's an inside bar. Momentum is in the bearish. We'll have to wait. Not even sideways. So reality is sideways and then 2.2% up. So overall, all the sectors have come back. There is some up move that has happened. Obviously, when the market moves up, sectors also will move. But there is weakness in the pharma sector and FMCG sector. Reality, metal, auto, IT is doing okay. But all of them has lost the momentum to the sideways or the bearish zones. So just try to wait for that to catch up to get into the bullish zones, right? Institutional participation, as of now, today's data has not come in, but look at the kind of selling that has happened. 3,000 crores, etc. 3,000 crores, near to 3,000. So 10,400 crores of selling has already happened by the FIs, and it's just 4 days in this 5 days in the trading, including today, right? 10,000 crores already sold. Remember that the entire November month and the entire October month, huge selling has happened. From April, the selling is happening from the FI side. Huge. April of this 2021 financial year beginning itself, every month it is selling. If you see, domestic institutions had purchased yesterday. Today we don't know what is it. So there is a chance that today, there might have been some additional buying that might have happened from the DI side, most likely. So that has not come in. So mostly FIs might have continued selling like they used to do the previous last several days, and DIs might have bought a little more because of which the market did not fall down. That's exactly might have happened, but we'll have to check that data later when the data will get released by the NSE. Now, right side you see is what the dollar index is, and it is shooting up and it's a green day today. So that means dollar is strengthening. But the currency pair USD INR is also showing that it is breaking out of the channel top, but still it is in the resistance zone where it hit multiple times recently. You can see that it is hit here, hit here, hit here. So there could be resistance and consolidation that may happen here, or it could fall back to the next support below. Either of that can happen, but as of now, the dollar is strengthening. Currency pair also is above 75 kind of levels, which is not good, right? Rupees weakened. It may be good for the IT, but yeah, crude oil had fallen down heavily to the 65 kind of levels, but it has shot up last 3 days. Today also it is green, and it seems to be climbing back upwards in the channel, which is not good. We had gained because of the downfall, but this seems to be moving back to where it was, right? Gold is within that channel, which is a cup and handle part, and it is consolidating that famous support zone. So where it has taken support since very long time, since June, July, right? It's a major support zone where it is trying to consolidate. It attempted to hit the channel top and then face resistance, and then has been fallen down, and after that it has frozen the stop. Now yesterday Dow Jones, looking at the US markets below, you can see the Dow Jones had made a big recovery of 640. Today it has not opened, but you see big moves in the big green moves. Up moves are seen in the Nasdaq as well as the S&P 500 also is green. Overall there is a green. There is, probably because of the curve surge, Omicron fears have gone or slightly reduced, could be the reason for the recovery. There is overall there is green as of now, but this has to be validated once again tomorrow before the pre-market to get a clue. Sometimes it may reflect in the SGX if it is a big move, right? So two actionables, Bajaj Auto looks weak, and there is some kind of double top that has happened, and it is very weak, and momentum has gone down, hardly any volume, and trend is negative and rising ADX, right? Price action also shows that it has broken a major support zone, and there's a long way down. It could give more on the downside shorting. Power Grid Corporation seems to be moving in a channel. It is in the mid of the channel. It could give some up moves till the channel top. So you can cautiously go long on that, as long as the momentum does not drop back, right, into sideways. Right? So let's see two actions that we have now. Just to wrap up, my view on the market is, even though we had a good bounce here, it is not clear where the market is heading. Right, tomorrow's RB when it may react violently. Right, charts are still lost the momentum and the trend. Although there is this big bounce back happened today. 1% of recovery happened after 3% of crash. The important thing is that 17K has regained again. It lost that earlier, and it is bounced back reasonably good. That my bearish is mild, right? It is still bearish or still neutral because it does not give any conclusive idea on where the market is heading, because as I said earlier, the market volatility is on the downside expanded, so definitely it is not consolidating, but moves that you are getting is choppy, zigzag V and inverted V kind of shape, so that does not give any clue. But definitely there is scope for another 5% of correction, which is possible till 16,000 kind of levels. We can find a support. That is still there is a possibility. And above 17,500, if there is no green close that's happening, as we have seen earlier from the SupportResistance, it does not give any indications. There is a lower low that is getting formed on the charts. You can clearly see that. So unless and until that lower low is taken out and then market moves and closes above that, market would remain bearish, and there is no indication of a sideways movement as of now from the Bollinger Bands, right? So that's some decisive to know about, especially when there is an event that is happening tomorrow. So my view is neutral or mild bearish. So only thing that we can do is have tight stop losses and hedge positions, and always, if the VIX is going about 20, try to stay away or play safe. Right, options directional always. Even if you have a view on the direction, go for vertical spread, so that if the view goes up, also the risk is defined. So that's, and this is if you're trading on the options, right? So that's a wrap up that I have. But this is my view. It's not, none of these recommendations are just for educational purpose. Try to form your own market view and try to pick up the stocks based on the same pattern which we have analyzed, and then have a good trade plan before of your own, before you start trading tomorrow. Happy trading, happy learning. Thanks for watching. Bye.